Business news now, and while many of us are lamenting the high price of petrol, soaring crude oil prices have lit a fire under the earnings of the major oil companies. The UK-based BP netted nearly $8.5 billion in the second quarter of 2022, nearly tripling the profit of the same period a year ago. BP's results follow record-beating performances from competitors Shell, ExxonMobil and Chevron, all of which reported earnings last week. However, the oil majors have been heavily criticized by environmental groups, which have called for greater windfall profits on fossil fuel companies. Well, here to discuss that story and the other business news of the day, including the market reaction to that US delegation to Taiwan and some brighter results from Uber, is Arise correspondent Laurie Laird. She joins me now from London. Good to see you, Laurie. Let's start with the energy giant BP reporting its biggest profit, I understand, in 14 years as global energy prices soar. Tell us more. I understand it's second biggest in history.
You got me there, Charles. I was just about to point that out to you. And the reason behind this is very simple. It's that energy prices, wholesale prices of oil and gas, and BP relies a little bit more heavily on crude oil than it does gas. The prices of these commodities have risen so very much. They were rising before the 24th of February when the world changed, and they've risen a whole lot more after that, after Russia invaded Ukraine, putting into question some of the big supplies of crude oil and supplies of gas. So if you think about it this way, the fixed costs for someone like BP or Shell or Chevron, the fixed costs are already sunk, if you will. And if you pardon the pun, I do mean sunk because it takes a lot of money to explore for oil and then to send oil rigs into the sea where a lot of oil is recovered and to bring that out. So that money is already spent. That investment is already spent. So when oil prices are very, very low, the profit margins are not high for these oil majors, but when oil prices go much, much higher, that's when they reap their profits. And while 8.5 billion sounds like a lot of money, it is a lot of money. It doesn't even sound like it, Charles. But you have to keep in mind that oil prices not that long ago, just 2 years ago, were very, very low. And in fact, in April of 2020, when we thought the last time the world changed, and that was during the midst of the COVID pandemic, there was a fear that oil prices would go through the floor. And in fact, for a very brief period of time in April of 2020, oil prices were below zero. That means oil companies were paying people to take this oil off their hands. It was only lasted a very short period of time. So during that kind of a period, the oil companies don't make any money. And in fact, in 2020, BP lost $20 billion. So if you look at the profit cycle for an oil major over a longer period of time, things tend to balance out at least a little bit.
Well, the next question is there a risk, or perhaps I should say, is there a chance of another round of windfall profits?
Yeah, absolutely, Charles. I think very much so. There will be some kind of argument about this. And already we've seen environmental groups here in the UK. We've seen the Labour Party really rallying, really lobbying for another tax on those windfall profits. And it looks like a very attractive thing to do. People are really hurting and will hurt more because of higher motoring fuel costs, because of higher gas prices. So politically, it looks like a bit of a smart move. You take money from these extremely profitable oil companies, or at least extremely profitable at the moment, and redistribute that in a way that makes it easier for struggling families who are unable to purchase petrol or heating fuel. The problem with that is it may well discourage investment. And we look at BP today, while not all of that profit will be reinvested. A lot of it's going back to shareholders in the forms of dividends, in the form of share buybacks. So the first people that BP are taking care of are their shareholders. And when companies like BP, Chevron in the US, they're getting very, very mixed messages from government. A couple of years ago, not even that long ago, 18 months ago, these companies were public enemy number one because they're such big polluters. And that's not negotiable. That is a fact. These are companies that emit an unbelievable amount of carbon. They were being castigated for that. But now, when crude oil is short, when gas is short, we have governments, particularly in the US and the UK, saying, drill more, please get more oil and gas out of the ground. So it's very difficult for these companies to figure out what the right investment schedule is if they don't know whether investment that they undergo now will be profitable somewhere down the road.
Well, we haven't got that much time left, Laurie. Let's go to Taiwan and track Nancy Pelosi's controversial journey there. Her arrival causing some market jitters, I understand.
Yeah, I was surprised to see such a market reaction, Charles. The Hang Seng Index of Hong Kong shares down about 3% at one point today. It ended a little bit better than that. Tokyo shares down about 2%. And the fear is that China will feel that it is forced to retaliate in some way, and that could be economically. What that would look like is difficult to imagine, but the fear is that somehow China would attempt to cut Taiwan off from the global trading system. And Taiwan is such a crucial supply of one element that everybody needs, and that's semiconductors. Taiwan is the biggest manufacturer of semiconductors by far, or make that Taiwanese companies, a lot of whom are operating on Chinese soil. So the fear is that China could do something to interrupt the flow of semiconductors from Taiwanese companies operating in China to the wider world.
Okay, well, you'd rather answer that question about semiconductors. As you said, Taiwan, the world's biggest producer. Let's move on to Uber. The company lost $2.6 billion in the last quarter, and you're going to explain to me why this is good news?
Absolutely. Try and stay with me here, Charles, because losing 2.6 billion never looks like good news, although it's not been that long since Uber was losing more like 5 billion a quarter. But for the first time in its history, its 13-year history, Uber has what's called free cash flow. That means it has cash left over after its capital expenditure. It's never done this before. And that 2.6 billion loss looks a little bit better when you take out a 1.7 billion loss on some of Uber's investments. So the company is still a long way from profitability, but it is getting ever closer. They said that in the second quarter, they've had the best quarter ever in terms of the number of drivers. Remember, drivers were starting to desert Uber a while back. They didn't like the working conditions. People are taking rides more frequently than they were because they're going back to work. So lost more than $2 billion, but actually, if you turn it around, a pretty good quarter for Uber.
Laurie, thanks very much indeed. Very interesting talking with you. As always, Laurie Laird, our correspondent there in London.